I heard on the street they're attacking smart money concept traders.
Smart money concept traps, baby.
Please make more videos like that.
I want to kind of hear your thoughts on the markets now. When you do technicals, what are you looking for?
Looking for SMC traps. Obvious places that so many people are getting into positions, waiting for those levels to get taken out, and then that's where I'm looking for a position. Yes, I was that type of trader, but then I started critiquing things and understanding why are us smart money traders that learned like, oh, your stop loss might take profit. Why are we getting stopped out? What is happening? No one's perfect in trading. You're never going to have a 100% win rate, and that's just one of the things beginners think you're going to have, and it's impossible. If you become okay with being a loser and just understand it's a process, the process is going to pay you for just being patient and not over risking. The M1 to me, I understand that it may be noise, but I think that people just need experience with it, because to me, it's the same thing as trading the 15-minute time frame. It's just patterns, just a lot faster. They kind of like, once again, look at us like, oh, I heard that's bad. It's like, yes, you heard that's bad from babypips.com. People can't believe how small our stop losses are, but it's just like, we understand that like, if that stop gets taken out, it's invalid. Yes, I understand, oh, give it breathing room, like whatever. It's like, no, the whole model that I'm trying to take right here is invalid.
So you mentioned smart money trap.
Yes.
You're going to piss off a lot of smart money traders. I want to hear your description and understanding of the term.
Yeah, great question. So,
well, ladies and gents, welcome back to another episode. I want to say this. Luca has flown all the way from LA to Miami. That's a 5-hour flight just to make this, well, for you guys, the podcast happen. So, Luca, thank you for coming through and joining us on this episode. Just off camera, we've been speaking about, our beliefs in the trading space, how we trade and so forth. And it seems we are rather aligned. So I think in this episode, we take a technical deep dive and navigate through our beliefs and why we hold certain positions, which for some might be quite controversial, for some might make no sense. But I guess we've held those opinions before and arrived here.
Exactly.
So I'm looking forward to this chat. But yeah, for those of the viewers that maybe don't know your story or who you are, if a brief explanation on your trading journey and what makes you you.
Yeah. Well, first off, thank you so much for having me. I'm a big fan of Titans of Tomorrow, so I had to make it happen, come out here. I'm a fellow podcaster myself, so taking notes from you and what you've been able to do in the industry so far. So thanks for having me here. Little background about me. I'm from California. I've lived there my entire life. I originally was born up in the San Francisco area, in the Bay Area, kind of the tech industry. And recently, within this last year, moved down to Los Angeles, been enjoying it down there with some other traders. And I started trading in 2020, about a little over 4.5 years ago. And, never looked back. We're here now.
So one theme that I found in the US that I've been here and doing some pods in New York and here too, nobody touches FX anymore, it seems. Everyone's in futures or options or stocks. So why are you still remaining to trade FX when there's these other options that seem more popular in this area?
Mm-hmm. I think it's a great question. I think because I've been so accustomed to it and it works. You know what I'm saying? If it's not broke, don't fix it. And I think that when people talk about trading FX over going and trade something like futures or options or something, especially in the US, I think it comes down to oh, it's regulated, so it's safe. It's like, in my opinion, I've been trading on so many different brokers for so long, and I've never honestly had one problem, ever withdrawing, ever getting a payout. So I think that brings a lot of fear into just the market of trying to trade FX in the US. But I think, like I said, just being used to it. But I've tried to dabble into futures. I think it's pretty cool. It's a cool concept, but I think that I will never stray away from FX. It's here to stay. I've always enjoyed it, and I'm not going to, stop trading it because of these little conspiracies that are going on, you know?
It seems like a lot of people that it's a mass migration towards futures was off the back of the MT4 situation, prop firms, maybe not giving the same treatment or maybe just delisting US traders and so forth. So that's forced people to change their asset decisions, meaning towards futures. Not necessarily a benefit orientated. And then the cope comes as but it's better price action, la la la.
Yeah.
So I want to hear your thoughts on for someone that's neutral or someone that's beginning out and they're thinking, should I do FX? Should I do futures? Your overall assessment trading in both, what would you prefer?
For some reason, I still find FX a lot easier. I would recommend it to beginners. I have a lot of friends and a lot of people who still reach out to me via social media or email or whatever it may be, asking how to get started, etc. And I still stray them to FX. I still think, to me, it's just a lot easier. The price action, there's so much information out there that you can go learn from it. When it comes to futures, I think I don't know. For some reason, I found it a little bit more confusing. So for a beginner aspect, I would still recommend trading FX. But there's nothing wrong with trading futures. I just personally have always found FX to be what my bread and butter. And you know what I'm saying? Like I really became profitable off GJ. That was like the first pair that I would say that like I became the most consistent with, which is obviously an FX pair. And then from there, just being able to use that same price action and concepts that I learned from GJ to go and apply it to other markets. Like, you know, I trade a little bit more of indices now, but still on FX platforms. You know, I'm not trading on, like, I trade futures here and there, but I still mostly am, like, with my live capital and stuff is FX or, you know, saying like FX pairs or just indices on the FX platform.
So I want to understand the 4.5 year journey, and we've touched upon, let's say, beginner traders. So I want to hear your thoughts on your journey starting in 2020 around COVID times. I think the FX space or the trading space was the Wild West with the rise of a lot of MLMs, the rise of a lot of gurus, and you know, a lot of therefore ideas, beliefs, and controversial statements being thrown around. So I think it was maybe quite a tough time to start out to be a trader as opposed to maybe now. But I want to hear your thoughts of beginner of your journey, year one of trading Luca, his thoughts and beliefs, and the way you traded and then the positions you held to now 4 or 5 years later, the beliefs you hold and the views you have in the market.
No, 100%. And it's such a good like thing to talk about because we've all developed as traders over time. And for me personally, like just thinking about how I trade at that time compared to how I trade now is just completely different. So, you know, like your question asked, back in 2020, I did actually join through an MLM. They were just going crazy. The COVID time sent me home from college. I was a college student. I graduated all 4 years. But during that time, we actually got sent home, you know what I'm saying? Because there was no more classes. No one knew what was going on with all the COVID stuff. So I got sent home and I was looking for ways to make money online. And that's when I came across day trading through an MLM ad. You know, turn your phone into a ATM, you know what I'm saying? We all seen those copy and paste, you know, whatever it is, copy and paste profits. But, you know, I just want to say that, like, I'm just glad I was open-minded enough. I feel like traders or just people out there who maybe even haven't tried trading don't do it because they're not open-minded. So, like, first off, I just am super glad that I was open-minded to even try it out in the first place. But after trying it out, I, once again, just kind of could tell off the bat in the MLM I was a part of that they didn't really want to learn how to trade. It was more maybe one call a week that had something to do with learning one of their indicators, but all the rest of the calls were how, like, hey, I know that monthly payment is a lot, so go get your friends to join. You have to pay anymore. So, you know, when I looked up YouTube videos about it and saw that was kind of the thing that kept me in it was that they still were calling trades. So I was like, okay, they're actively trading. The trades kind of suck now that like I know how to trade, but still, like I just didn't really stray away from it at first because I believed, all right, if I just stick with it, then I'll get to the end goal. Which I'm super glad I had that mindset.
So in that MLM kind of environment, where from what I gathered, there was a lot of courses and educators and styles of trading within, because it's an organization with tens of thousands of people. So what was your beginner spot in fund or trading? Was it technicals, fundamentals? What kind of technicals in those early days?
Just like support and resistance, learning like, all right, go to the 1 hour, 4 hour market level of support, kind of just go down to the lower time frame. If it rejects like more than 2-3 times, it's a strong level of support, which now as traders like us are, where it's like, if I see like something that's hit 3 times, I'm like, oh, I cannot wait for that liquidity to be swept before I take that trade. So like I said, it's just the concepts that like we learn once again that like, oh, if it's rejected like 3 times, like, oh, take it when it comes down and bounces again, where it's like now it's like I'm not even going to touch it until I see all those lows get taken out to then look for a break of structure, retracement, you know, any of that type of stuff. So
it seems you've come a long way from your initial starting point. So it begs the question to me of if you start off and you have people you look up to and people you trust in those early days, and those are the ones that give you certain guidances, and you ended up in a position of supports and key levels and the things you just described, to then see, okay, this maybe isn't working for me, or there's more to learn. What was that journey of navigation? Because I think for a lot of traders, we all start off with someone. And usually is the case. We all start off with someone that has a lot of lifestyle, because that's what attracts us, or that's what catches our attention. And then we end up maybe somewhere else. So but that's always the beginning point. So that journey of navigating from where we are as beginners all the way to a profitable situation, what did that journey look like for you? So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow.
So I've kind of touched on this before, and I just have to give him his flowers. If there was an individual I had to say that like really helped me get to that next level, was literally just watching Daniel Savage's live streams. A lot of people once again have their opinions on him, but like back then, like you said, the lifestyle drew me to him. But it wasn't just that, it was like his charisma. And I would watch him on live streams take trades in front of hundreds of people, And when we would lose, or let's say I took the trader, it was a loser, him having to low key yelling at the screen, being like, oh, what, you're gonna go cry about this little loss? Like, you're not gonna make it as a trader. Like, that's what I needed to hear.
Tough love, yes.
Tough love was literally what I needed, because no one's perfect in trading. You're never going to have a 100% win rate. And that's just one of the things beginners think you're going to have. And it's impossible. I don't know one trader that has maybe burned, but you know what I'm saying? Not a lot of traders have those high win rates, where I'm like, if you become okay with being a loser and just understand it's a process, the process is going to, pay you for just being patient and not over risking and all that type of stuff. So I would really say if there was an individual, it would have been him, just watching him day in, day out, trading GJ during London session. Like I kind of touched on, GJ was the first pair that really, I was just, once again, you talk about times of day to trade. And that was such a key thing for me, was like, all right, London, GJ, makes sense. You know what I'm saying? European pair. So just little things like that, while once again, trading with the community, trading with someone kind of that was I would say kind of a mentor, really helped me, guide me in the right direction to stop trading so many pairs, focus on risk management, and then risk to reward. Really, if it comes down to it, risk to reward and risk management are two of the most slept on things ever. It's if you keep your losses really small and consistent, and then just hold your winners to be a lot larger, it doesn't matter how big they are. It's unbelievable how low of a risk to reward you can have, but still have such a low win rate. You know what I'm saying? For me, I personally go for 1 to 3 risk to reward trades, and it's I can go and have a 20-30% win rate and still always remain profitable.
Okay.
You know?
With that being said, would you rather, or do you rather focus on your win rates and optimize for that, or do you focus for the best risk reward you can get?
So that's come with time and data, and I'm a big believer in data. And I think that I gained that 1 to 3 thing I talked about off of just, once again, backtesting for hours. I would say 2022, 2023 was my spending 5 hours a day. I had a strategy, but I was just perfecting it. Like we talked about with the, looking for inducement, or lows to be taken out, whatever it may be. Just those little things got taught to me, not by watching a video on YouTube, but literally just by having my strategy of supply and demand, and then tweaking it over time, understanding, all right, more likely than not, when a low gets taken out and then has a good reaction off that zone, and then understanding all right, if I actually wait for a closure of this break of structure, and then wait for there's all these things that make the strategy higher win rate, which over time, it's just, you just critique, and then the win rate just kind of figures itself out. And then, as well as, once again, where to close. I think exit strategy is a big slept on thing.
I want to echo what you just said, because a lot of people get caught up in the courses and the mentors, which is an essential portion of someone's journey, but it's not the journey. I think it's a great stepping stone, and it's a great starting point. But once you've got an amount of information, there's so much. We can be a sponge, we can learn so much, but it takes 6 months to really learn everything that's out there, in my opinion. If you put your head to it, you can pick up everything quite quick, but then you can absorb all the information in the industry, do every course, and still have no idea what you're doing. Exactly. And I think what you just said is key of being in a situation where you can learn from the markets. You can navigate price action, and through application, learn, make mistakes, adjust, fine-tune data, go through sample size, and then make these decisions. And that's market experience. That's the IQ, and that's true application-based trading. And that's the real journey.
That's
in
real
my
trading.
opinion. That's where traders are born, I think. I want to touch on this kind of point of you were using support and resistance. You had trust because somebody taught it to you, and in backtesting is also misleading, because you have a confirmation bias. I'm looking for support to work, so I'll look at opportunities where support worked, and you'll kind of ignore the times that it didn't work. So when you start to do backtesting, oh yeah, this is great, this is working, look at all these support levels getting respected. Then you try and do it in the live market, and you take a couple of losses. Okay, this isn't the same. And that transition from backtesting to live testing or live trading. So when you were in that situation where it was maybe frustrating for you, you were not getting the results you were wanting, and then you transition to more seeing this as liquidity and so forth, I want to kind of hear your thoughts on the markets now. When you do technicals, what are you looking for? How are you doing it's Monday, you're starting your trading day. What is your process when you come to your trading desk? Yeah,
great question. So honestly, as of recently, looking for SMC traps, looking for just obvious places that so many people are getting into positions, waiting for those levels to get taken out. And then that's where I'm looking for a position. It's, I used to really, this last year, a year ago, was really still taking just supply and demand setups, just when demand's being respected, good reactions. But I've just now coming in this year with all the backtesting and stuff, I was like, wow, just looking at how much I've noticed just lows being taken out, liquidity sweeps before the actual move is just really key. And one of the ways I even figured that out was literally we've talked about how I live stream, is people in the live stream telling me like, oh, buy now, like it's reacting off the demand, like buy now, whatever. Then it would break highs as like a usual entry type. And I'd be like, I'm not getting in, let's put this up. And I'd put up the position as if it was live and let's see what happens. And it always would get stopped out. And I go, all right, I'm going to get in now. Just as like a learning lesson, and literally get in at the lows being swept, or I'm going to sell. No, right back up. You know what I'm saying? It's like I really think that once you learn liquidity and how the markets really need to gain liquidity to go in the actual direction, everything else is just like, it's just so simple to me. You know what I'm saying? Like I can clearly look at any, I stay to like the 1, 5, and 15, but I can look at those time frames, the one whatever, and just understand like, no, there's still so much liquidity sitting back here. I'm not buying yet. We're still here, or just premium and discount. Looking at an impulse leg and just being like, you guys are still really early to this move. You know what I'm saying? We've kind of discussed a little bit about like using the daily time frame, but it might not be the most relevant if you're trading the 1-5 minutes, just about those time zones. But I don't necessarily trade the daily 4 hour. It's more literally looking for like the 1 hour impulse where price is where it's heading to, and looking for retracements into discounted price, looking for lows to being taken out, looking for little change of characters, market structure shifts, and then I'm taking those little time frame positions for my little 1 to 3 positions, which a lot of people are like, oh, why 1 to 3s? And I have a YouTube video about it, and it's literally because, once again, with all my data, I went and took 3 exit criteria that I went and was like doing pretty recently, which is either basically the one that I use for the majority of the time was using the 8 smooth moving average. And for some reason, all my backtesting, I would do either to hold until session highs. I did till we would have let's say I got into a buy position and made a higher low. I would then get out at the higher low. Like there's all these different exit criteria I picked. And out of all of them, at the end of I did it for 6 months of, the pairs that I trade. And the one that had the biggest outcome with an exit criteria was the 8 smooth moving average. Every time that I would take a trade, it would be above it. Every time that price would then close back below it, would then most likely show me, more often than not, based upon the data, that it would at least come back to break even, which I like going break even after at least a 1 to 2. I don't do after 1 to 1.
So you take a partial when it crossed this EMA?
Yes, exactly.
So
it stops break even.
Are you therefore taking partials at this EMA currently, or are you doing it?
So I was going to say, that is still one of the ones that I still do, but the other one is literally just, if I get to a 1 to 3, I'm cutting it, because I have literally so much data of like, all right, the session highs is like a 1 to 4.5 or whatever. For some reason, all my data shows me that like my trades go a 1 to 3. I can try to push for those 1 to 6s, those 1 to 5, like whatever. Even those 1 to 2s, like I don't even really close out. Like I just know based upon the data, and I trust it. You know what I'm saying? If you really have data to back it up, it's proof of concept.
Yep.
Like no one out there can tell me different. Like, oh, this guy's full of, whatever. Because literally, I've seen it. I've done the data. I didn't just make it up.
I think that's important to have, and even if you have your own data, you've done your numbers, and you come on a podcast and say, hey, look, this works for me, and I have the data to prove it. It's still important for others to do their own data collection. I think, not because your word is not right or wrong. It's more to say, when you've done that process of data, you sit in a trade and you have that real confidence because you've got your data behind you, and this is just another day in the office. And I think that confidence that comes from it. I want to hear your thoughts, because I don't know how much of my content you've seen, but I'm a big proponent of exactly what you just said.
Yeah.
And I did the same thing. I was taking partials on zones or levels, Asia high, structure points, supply zones, And then when you plot all these things out and all the concepts that we have to deploy, you can end up with like 10 potential valid exit points. New lower low on M15, new lower low on H1, new lower low on daily, cool. Liquidity pools, cool. Sessions, cool. Exactly. And then you're like, which one do I pick? So then you start to do emotional related decisions, or you take hedged positions and get kind of messy with that. Or what I used to do was look for reactions on these levels. But then as we see, you have false reactions and then an inducement, or you're just continuation. So it's hard to call, and there is no right or wrong. So then I thought, let me just not do that and fall back on my data. And meaning to say exactly what you just said. I took a large sample size and I said, okay, these trades, which I'm going to take anyway, what would be optimal in those same trades to get more out of them, of the same trades? Exactly. And I landed on a similar one, which is 1 to 3. But yours seems like a 1 to 3 full TP or a partial.
Yeah, like once again, if I'm at a 1 to 3 and like to the left, there's like just this big, fair value gap or something that makes me want to hold a little bit longer, I will. But like for some reason, like I said, I was a big believer in like, all right, if I take a Asian low, what I see people call like the silver bullet strategy, or whatever, when it's like, if we're bullish in the day and it takes up the Asia lows, then you take the trade, try to aim for the Asia highs. Just for some reason, even just literally backtesting just that strategy, just waiting for session lows and highs, I still wouldn't find, like I said, I tried to extract the best exit criteria out of them. And I noticed that like every time, let's say that like, for example, out of the whole month, let's say for 30 days, I did both those exit strategies, either like the Asia highs or the 1 to 3.
Okay.
More often than not, yes, the Asia highs might be like one time I hit the trade and it was a 1 to 5. Yes, this one time I took it was a 1 to 6. But there'd be all these trades that came back to break even, or would go to like a 1 to 3, 1 to 4, but then come back to break even, or go to like, or then stop out. So I was like, what is a different way besides this? Because this isn't extracting the most money. And that's where the ASMA thing came from, was just literally like, if you trade lower time frames like me, just if you guys put on the 8 smooth moving average, you'll see whenever we get a valid entry with my type of trading, once again, do your own due diligence. But every time, if we're like, let's say we're buying and we get into, sweep, break structure, go buy, we're always going to be above the 8 smooth moving average on the way up. It'll come back down and kind of make a higher low. And it more often than not will then use the ASMA as kind of like a support, and then go up a little more, still use it as a support. And usually when it starts accumulating, and then breaks back below, it's most likely going back to break even anyways. Yeah. So that's just like how I was able to extract more.
It's not something that I've tested myself, but I find it super interesting. And I like it because you're getting something that's objective. It's a condition. And I'm a firm believer of rules for your entry and your exit. And a lot of people then take that statement and add cope to it. So they're like, but there's this there and this there, so I should wait for that. And that is me being... So you can get lost in all of this. And now you have an objective form. Now, I want to throw a question to you. That is the position, or the same question I had for myself not too long ago, let's say 3 months ago, which was I've now moved my system for about a year and a half now to partitioning at 1 to 3 and 1 to 10. Exact same journey that you did. I did the same thing, and I came to a similar conclusion because our entry styles seemed quite similar. And then I started to do that for a long time. And as you mentioned earlier, this year that I've been trading and publicly documenting, majority of my profits came from these 1 to 3 partials. Out of the 55% gain, more than 35% is from just these consistent partials. By the way, a lot of those trades ended up in break even. Exactly. So it's so powerful to know that you can be wrong and still get something out of the market. And as you mentioned as well, risk management and portfolio management is actually more important than an edge, because you can have an average edge and be a phenomenally profitable trader, or you can have a phenomenal edge and still not make that much money. Yeah, it's what you do with the accounts. So when I was in that situation, it was working great for me, and I felt like I was getting the best out of my system. Then I started to think to myself, why 1 to 3? Okay, that's not what the data showed. That is what's optimal. Why is it? Why is that? So I started to question that a bit more. And but first of all, I want to ask you before I give you my thoughts. Why is it that your data has led you to this 1 to 3 level? Is it usually, as you mentioned, Asia low to Asia high, that range? Is it something to do with that? Is it...
right.
What are you pinning it to? Or you're just like, it's not worth questioning because it works?
No, it's just it's such a good question. I really think that I trust the data. And it's just that one thing I really like that you said was that like you could have this one edge that shows like this one strategy that does give you a really phenomenal win rate still, but how can we do it better? Because like I said, with like the Asian low strategy, trying to aim for the Asia highs, yes, more often than not, I'm not going to get stopped out, most likely, because if I get to a 1 to 2, 1 to 3, I'm going to stops to break even anyways. So I just, once again, was just trying to find a way that like, all right, if price isn't going to hit my full TP for the Asia highs, where is it going? Where can I extract the most money? Which was the 1 to 3 scenario, which once again is just that was my proof of concept. That's what I've still to this day kind of kept. And I'm, I could probably go, but I journal every trade still. So it's like, this is just one of those things that in a month or two, I'm just going to go back and start looking at all the trades I did. And all right, is there a different way I can kind of do it? But yeah, I don't really, I guess I haven't questioned it like you said.
So let me ask you this. What is your average stop loss on GJ?
GJ around, I try to do like 6 to 8 pips.
Okay. Being on M1, M5.
Yeah.
And I'm not familiar too much with GJ, but let's say on my perspective, EU and GU, my average stop is around this. 3 to 7 is my tolerable. Mm-hmm. Average is out around 4 or 5 pips, which is super tight. And even yours is super tight. And some people are like, what the hell's going on?
Exactly.
But when you think of it from a perspective of I and maybe you two are optimizing for not swinging, not even intraday, I'm more interested in where the session is going. Mm-hmm. So that is easily derived by just momentum, liquidity, volatility, and these things will carry that intra-session movement. And we actually joked about it off camera just now. It's like you can follow market structure, which is actually useful. Mm-hmm. But if you're in a big daily supply zone, you might be bullish for 3 days before it reacts.
Exactly.
So it's not the be all and end all. Market structure is not the be all and end all. So when I factored in that I'm optimizing for intra-session, this is the dialogue I had with myself 3 months ago. I was like, why am I doing this 1 to 3? Why is this preferred? And the answer that I kind of came up with is it's preferred for me because my entries give me a 3 to 5 pip stop loss on average. And on EU and GU, the average session volatility, my entries are tap and go or tap and stop loss. I'm not really hanging around in my entry zone. So it taps and then goes to a 1 to 3 and I'm happy days for me. But that's usually the session volatility. So when I looked into the average session volatility of EU or GU, it was around 15, 20 pips.
Exactly.
So, okay, well, it's not necessarily a risk-reward thing. It's more a case of my average stop is 4 or 5. The ADR is usually my 1 to 10, hopefully. If I nail the direction of the day, ADR becomes my 1 to 10. And the 1 to 3 became my average session volatility. So I was like, this is now a new way I can explore. And that's exactly what I'm doing right now. I'm like, okay, I've factored in that the time I trade is for session volatility. I want to trade the London Open because that's the most volatile moment, therefore most movements. I'm optimizing for sweeps, so I call it inducements. I'm looking for that manipulation with a volatile time. And then I'm trying to get confirmation of a change to go to the next liquidity pool. So I'm looking for that aggressive movement and then cap it. So even if market structure is wrong, I cap that volatile moment. And that's kind of the area I've ended up at. With all these things being said, you gave the example on your live stream how you have traders that are entering on a demand area, they're waiting for a break of structure. And these things are good. I think it's still enough to be very profitable because you're utilizing market structure, you're utilizing lower time for confirmation, you have a good win rate because you're with the trend, and you have a good risk reward because you're utilizing M1 entries. But then you also said that, okay, you wait for that sweep, you wait for that to get taken out, and then you enter. So why do you do that? And what is your thoughts on those kind of supply and demand, lower time frame entry kind of traders?
Yeah, I think that it goes back to just understanding, like you call them SMC traps, where like everyone is learning how to trade the same, where they're putting their stops in the same place. Where I see it too, where it prints the most perfect break of structure, like, you know, for like bearish break of structure to then retrace into a supply, gives a good reaction to then put you 2-3 pips in profit, and you think you're, damn, this trade's looking awesome, and then just to stop you out. So I think once again, it's just understanding that, like, I really just ask myself, if I keep being the liquidity, like, how can I avoid it? You know what I'm saying? Like, I keep getting stopped out. Why don't I just wait for liquidity to be stopped before entering in the trade? And it kind of was a concept that I just, once again, it sounds so simple, but it's just understanding that, like, more often than not, I've looked at those plays that look so valid. You watch all those YouTube videos of, no, this reaction is going to be perfect. You're going to take out this 5-minute high or this 1-minute high after this reaction. You're going to get a perfect entry to then go get your one, whatever. But then it doesn't play out. And like, people don't ask themselves, like, why isn't it playing out? And that goes into the data, backtesting, and all that type of stuff. So I just, once again, I really think that it just has to do with understanding that, like, if you can identify just where liquidity is sitting, it's pretty simple. If it's just, I don't know how to put it, when it's overbought or whatever. Like, I love when you brought up the, what's that model? It's like a fancy name, but it makes so much sense because to me, I didn't learn it like
on
that.
On my side, on one of my
your
videos,
side.
Maybe it was to do with the support resistance inducements.
Yeah, well, kind of, but what is that called? What's that model called? Like ICT traders call it?
ICT traders have the silver
where it's like
bullets.
a head and shoulders. It's like a head and shoulders, but what is it broken down more specifically if you were to like...
distribution from Waqar theory.
Waqar theory. So for Waqar theory, like Waqar theory makes a lot of sense to me. I think that it gets really, like, if you get really deep down into it, it can get kind of confusing for a beginner trader, but it makes so much sense to me when you like look at the market structure and then where the last kind of is happening, and then how to react after that. To me, it makes so much sense. But to like a beginner trader, they would never sell from up there. They're only gonna be looking for buys. But when we understand, like, no, watch, like, and then you just get in that little take out the high, we have all that liquidity. Where maybe trendline traders in that scenario may win, but other than that, like support resistance traders or people that are trading just like the whatever it may be are losing. You know what I'm saying? So I just really think that, like, if you are in the markets long enough, you're going to be able to identify these patterns and really understand what's happening in these areas. You know what I'm saying? But one of the things I think you skipped over that I think is like sauce that like you kind of just went over really quick was, guys, he talked about how his like stop losses on average is, I think he said like 4 to 7 pips or whatever on EU and GU. But then, guys, what's the average session range? If you like, this is something that I teach, but I just didn't think about it when you're asking about it, is that like I used to trade GJ with like a 20 pip stop loss or 25 pip, depending on how, you know, big the candles were or whatever it was for that session. But then like you go and ask yourself, you're like, all right, go back test all these months of GJ. What's the average session range? How many pips does GJ move on average? And then you're like, well, if I have a 20 pip stop loss, I like may only get like a 1 to 2 if I have like, you know, because the average range is this, you know? So like everyone out there, look at how big your stop loss is and then understand like how much risk reward can you get out of it? Because if your average daily range is 50 pips, but you have a 25 pip stop loss, the most you're gonna get out of it is and that's like if you get in at the right place sniper, and get it at, that's what I'm saying. So it doesn't make sense. So
what I actually did was I on TradingView, I got someone to code an indicator for me, and I asked them to add this in. I was like, can you just add in, can you tell me the average session volatility of my key window, the average session volatility of London, what's the Asia range usually doing, and go back and then tell me on this day, that over the last 50 days, this was the average. So therefore today is likely to be within this parameter.
Yeah.
And I just use it as a guide. I'm like, okay, if I'm looking to sell and the range is usually in the last 50 days X, I'm probably not going to target that way further because that doesn't make sense. Maybe in the coming days and if everything aligns so forth, but if I'm optimizing for session volatility, I better know where the session usually goes.
Yeah.
So I added that in. With regards to this lower time frame modeling and the demand thing and then getting induced. So when traders take losses, and let's say someone's doing these kind of things of market structure, lower time frame confirmation, some SMC in there and so forth, they might be profitable and therefore they have no reason to modify because if it's not broken, don't fix it, as you said. But my mindset at least is always of how can I improve it? And as we've just spoken, I had a 1 to 3 and I still questioned it. Even though it was working, I still questioned why it works. And that's kind of my curious mind. But I want to hear your thoughts on how you are, because if you're in a profitable situation, if you take a loss and you have this little wick out, the inducement, let's say, you're just thinking, oh, well, it's part of the plan, it's factored in, my data is still positive expectancy, so I'll just on to the next. But it seems like you still questioned it. So what is it within you to say, okay, I'm not fully satiated with a strategy, I'm still looking to know more and learn more?
I think that's one of the reasons why I love trading is that you never can be perfect. And I think that like, yes, you can have a strategy and have an edge or whatever, but I think there's always ways to critique it. So like, I just think that like, I'm still not even as good as I'm gonna be. You know what I'm saying? When it comes to even the position size I'm throwing or whatever it may be, like there's just so much room to grow. And I think that like, I am someone who just constantly likes to grow. And that's why I tried to trade in the first place, was I just wanted to find something to like pass the time. I didn't want to just sit around and do nothing during that COVID time. And I just feel like it was one of those things that's like, all right, well, I keep losing, you know, I don't have a 100% win rate. What can I do to kind of critique it to make it better? And like I said, even just to critique or get a smaller stop loss, like I just think that people can't believe how smaller stop losses are. Yes. But it's just like, we understand that like if that stop gets taken out, it's invalid. There's no reason why we should be in that trade anymore. You know what I'm saying? It's like, yes, I understand. Oh, give it breathing room, like whatever. It's like, no, if that high, then the whole model that I'm trying to take right here is invalid. It isn't part of like my setup or whatever. So
my logic to that breathing room is like, it has no logic. We enter trade, we put our stop loss on invalidation. People assume that we're getting greedy and lowering the stop loss just for risk reward. But to be honest, if you did that, you would blow your account way faster. And breathing room to me sounds like you don't know what you're doing. So you just say, I don't know where my invalidation is. I don't know what the market usually does here. Let me just throw a stop loss up here and hope for the best. You lack knowledge then.
Yes.
That's the reality. And when you think about it layers further, you're like, okay, what is this breathing room? The market is such an expensive asset. Like there's trillions of dollars exchanged in the FX market. So 1 pip on EU, one of the most liquid assets, is probably hundreds of billions, or I don't know, billions of dollars just to move 1 pip.
Yeah.
So if the market randomly goes up 10 pips, well, that's been funded by a lot of people. There's a lot of money involved, so you can't just say it's accidental and breathing room, whatever. The market is not random. And when you start to see the M1 and the precision that it has, just from backtesting, then you're like, okay, well, why am I going to just hang around with a 50 pip stop loss or just hang around on the 4 hour? Because the detail is here. The detail is the M1, which brings me to a point of a lot of people are still not believers on lower time frame. A lot of people refer to M1 or lower time frames as noise and don't get caught up in it and so forth, which for a beginner, I understand. You don't want to get caught up in it because there's a lot of emotions and movements. But in general, what's your thoughts on the M1 time frame and people referring to it as noise?
As a trader, it's very simple. You have to find an edge and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your backtesting tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it. And probably you'll be using it for years to come.
I think that I'm a believer in price is fractal. If you guys go to the 4 hour, you'll see similar moves happen on the 4 hour and the 1 minute. It's just people and their emotions just get in the way and then make them think that it's noise, that they can't really take those trades. I think that, like you said, when it comes to, if we're on the 4 hour time frame, yes, if we're looking for like a inducement and then a break of structure or whatever, and then your stop is below that inducement, yes, if you're on the 4 hour, your stop loss is going to be pretty large. But if you're going to take that same setup, the same pattern, or, kind of strategy when it comes to the inducement, the break of structure, whatever it may be, it makes sense for us to have those small stop losses. So like the M1 to me, I understand that it may be noise, but I think that people just need experience with it, because to me it's the same thing as trading the 15-minute time frame. It's just patterns, just a lot faster. And it was something I had to gain with time, being more of a 15-minute trader, because I was someone who did hear, oh, the 1 minute's noise, like you're just getting kind of faked out. But like you guys will see me on my live stream and stuff going down to like, all right, I'll have a 5-minute setup and now I'm down to 1 minute waiting for entry criteria. You know what I'm saying? So like, to me, I just think it goes back to what you said, kind of lack of experience for the trader, is that they kind of like, once again, look at us like, oh, I heard that's bad. It's like, yes, you heard that's bad from babypips.com. Like go learn from like a, you know what I'm saying? Like it's just because they're teaching you the basics. Now it's time to get out of the basics, the support and resistance, having breathing room on your stop loss, whatever it may be, to then, all right, this is the structure. I'm getting into this trade with this size stop loss. Because one of the things, even when I was getting to the lower time frames, was I was still taking those M1 trades, but still giving my stop loss a little bit more room. It could be faking out this. Oh, what if like the 15-minute makes a wick or whatever? It's like, well, then now I understand that like that's just, then the entry criteria is wrong and you're just like wrong. You know what I'm saying? You got to wait for the right things to happen, like the right concepts to play out, to then get into the trade, to then have your odds play out. And then it goes back to what you were saying about like, if you get wicked out, how do you kind of have that mindset? To me, it just goes back to what you said about the probabilities. You know what I'm saying? I have a proven edge that like I know the probabilities and the win rate of my strategy. And then if I go for a certain win rate, what percentages I could potentially get out of the markets. And that's like all I really care about. I don't care about your strategy. It's if you're making money or you're not making money. That's really like all I care about.
With that being said, not too long ago, you mentioned smart money trap.
Yes.
You're going to piss off a lot of smart money traders when you say smart money traps. So I want to hear your description and understanding of the term, which is a kind of a new term. I've been using it too. And maybe we see eye to eye, maybe we don't. So I want to hear your thoughts on what is a smart money trap.
So for me, I think that the term your stop loss is my take profit was coined from smart money traders. What's just so funny that now we're people looking for smart money to be taken out, where literally I'm looking for your stop loss to be my take profit, or vice versa. Like your stop loss is my entry, honestly. So I just think that, guys, I come from a supply and demand background where like think of the most basic supply or a demand play, you know what I'm saying? Clear bullish structure, clear demand created that led to a simple break of structure and the retracement into, with a fair value gap sitting above the 5 minute to then take it. That's just the most like just coined supply and demand like play. Well, it's like, guys, yes, that's going to play out here and there, but then it goes back to like, yes, I was that type of trader, but then started critiquing things and understanding that why are us smart money traders that learned like, oh, your stop loss might take profit, I'm taking whatever. Why are we getting stopped out? What is happening? Well, it's once again being taught about where to put our stops based upon the supply and demand, all that type of stuff. And then once again, it just went back to my back testing of going, all right, wow, every time I'm getting stopped out after these, like, you know, like a higher lows being formed, then I'm getting stopped out, but it's just happened into this lower, like a lower demand or maybe, or just needed the liquidity, whatever it may be. I think that like I was able to learn from that was really just waiting for liquidity to be taken out and then just price me in a discount. Even if it's like a 5 minute little like impulse, just once again, waiting for that 5 minute to retrace back below the 50% of that candle to then get into the trade. Because like I said, just simply waiting for that, I think you're going to get a way better entry.
Cool. So with this smart money trap model, for me, it was not a consideration, a thought, or a belief at all until maybe like 1.5, 2 years ago. And prior to that, in my 8-year journey, majority of my time was spent pro SMC and utilizing and profiting from it. And I'm not on anyone's team, on anyone's side. I have no objective or agenda. It's like when it was serving me, I used it. When I start to see it's not serving me and the markets are changing and price action is navigating in a different way, I started to adjust. And I think that's what everybody, we shouldn't have loyalties to any strategy because it's not a gang. It's just we're here to make money.
Yeah.
To the point of like people may be thinking, oh, does that even happen? I want to hear your thoughts. Like, have you seen in your 4 or 5 years of trading, has the market changed in any way, or is it as it was right at the beginning?
I think it did because as a supply and demand trader who I was profitable, I was getting payouts, I was being consistent with the strategy, but still critiquing it and backtesting it and then understanding that like, wow, as of lately, why is it that every time that demand gets taken out first, the liquidity gets swept? Why is that turning into all these profitable trades? So it's just adjusting a little bit where I do think that the markets did adjust a little bit where I don't know if the market makers started watching some supply and SMC stuff on YouTube and we're like, oh, let's learn that, whatever. But
I think that's maybe a going narrative.
Yeah.
But to be honest, when you see the amount of money pumped in by funds on AI, machine learning, quants, data scientists, teams, the smartest minds in the world. I recently met a guy in London. I was there 2 weeks ago. And a friend of mine introduced me to him, and he was a data scientist from Oxford. He had a neurosurgery background and pivoted to that, and he was a trader. And in fact, he's probably watching. He's a viewer of the show. So I thought it was so cool that a data science neurosurgeon from Oxford University watches Titans of Tomorrow, has an interest in trading.
Right.
And he was deep into AI. So I wanted to explore with him, like, okay, trading AI and so forth. He said these big funds will literally come to an Oxford, Harvard, Ivy League universities, and they'll sponsor a whole PhD department. So they'll sponsor a AI department to say, I want to solve this problem. They'll get the brightest minds in the country and get 3 years of their time for a PhD to focus on whatever problem they want to do and just pay for their tuition. And they own the IP to whatever outcome is. Yeah. He was telling me even the CEO of BlackRock or Blackstone, I forgot which one, is a professor at Harvard. And he was like, why do you think he's giving lectures? Is to have access to these people. He even mentioned Blackstone or BlackRock has a campus in China where they sponsor US students to go and do a PhD in China to be in that environment. So he was like, why are these biggest of biggest funds doing this? Why are they in these university college campuses and so forth? It's because they want to be involved in AI and machine learning and so forth. And when you're deep roots in that sense, of course the market's going to have innovations. Of course you're going to have AIs and algos modifying the market. And I don't think it's a like one guy conspiracy. I think it's just the direction of people's behavior, funds' behavior, and money doesn't lie. Yeah. And I think that's caused real change in the market. And the way I learned smart money traps, it was not through a book or not through conversation. It was just through my smart money zones that I used to take, but are working so well, don't work anymore. Okay, getting wicked out. Yeah. Just a few pips. I'm like, why am I getting wicked out all the time? So then you could have the breathing room methodology of just, okay, give it space. And I guess it could work. You know, you have your lower risk reward there. Or you just try and understand, what is this pattern now? What is this change in the market? And that's kind of the decision I made. Same as you just mentioned, supply and demand zones. They used to work so well. Like 8 years ago, they were the best thing ever. Yeah. I wish I understood it better back then. But now the amount of times, it's a weekly basis. This week on EU, I literally saw a supply zone that was clear as day on the 4-hour time frame. Definition, textbook, everything. Got wicked for 5 pips and went lower. What is the reason for that though? Why is it just wicking something randomly that should be a solid supply level, order block, fair value, everything was there, wicked for 5 pips. And that's also getting in the breakout traders bullish. That's also getting buy stops triggered. Like there's a lot of things happen when these inducements happen, these liquidity events. Moving on from this, what is your definition or understanding of liquidity? We've mentioned a lot, both of us in this podcast so far. So how do you define liquidity? How do you see it on the charts? And how do you use it to your advantage?
The way that I would kind of just explain liquidity is just looking for, kind of like you said earlier, like liquidity pools. Like I look at just clear places that I believe stop losses are in. You know, I didn't like learn liquidity from a certain video or whatever. It literally comes from the concept of me just understanding, like hearing it from people, but then understanding, like you said, that the little wicks, like why is it that every time I'm getting wicked out, why don't I try to implement the wick into my strategy and wait for that to happen to then look for entry criteria? So I would say that like, I just, once, like I said, you understand that like these big markets and these big like institutions that actually move, you know, price, they need liquidity, they need orders. Because think about it, guys, like if you're in like a buy position, like the money that you're like making is like the seller's positions, like vice versa. It's like if they're want to get into a huge multi-million, billion-dollar buy position, well, they need multi-billions of dollars of like liquidity to be able to be gained to like to fuel the move. You know what I'm saying? So I just learning that, and then once again, just having the data or just the data of like just waiting for like lows to be taken out and stuff is how I gained the idea of like, all right, these are liquidity pools. These are areas that like just stop losses are, is basically how I would define it, is that like areas that you know price is most likely going to come and take out before going into the actual direction. That's like how
you know how earlier in the conversation we mentioned exit points and how you could have like 15-minute lower low, then you could have a 4-hour lower low, daily lower low, and these are all valid targets for a sell. Then you also had like liquidity pools. Let's say you had your Asia low and whatever. And we spoke about how there can be so many lines on your charts and it's hard to know which one to pick.
Yeah.
The same can happen with liquidity, and you start to plot out everything that could be liquidity. You say, okay, here's a supply zone, boom. Here's a resistance level, boom. Here's a Asia high, boom. And then you have this trend line forming, boom. And then you have all these zones that could be liquidity too. What is your decision-making process when you've identified potential pools and potential liquidity weighting to say, okay, market doesn't need to go for every single one of them. Maybe 3, maybe 5, I don't know. How do you decide when there's enough liquidity and therefore to take a trade after the liquidity has been taken?
Discount. Like honestly, like really trying to identify where like the impulse is and then waiting for like, are we in a discounted price? Are we still a little bit overbought? Should we retrace a little bit more? And then just waiting for like those lows to be taken out before waiting for position. If price is in a discounted price for me, that's like really what I look for is that, and then waiting for some sort of lows. When it comes to like exit criteria, I think that's what was hard for me and why I, instead of going for, all right, I took this trade at the highs and I'm selling and I see the hourly lows, I see the daily lows, I see the session lows. Like you said, I didn't know which one to take because like sometimes I would aim for the session lows and it would work, but then it only went to like the daily, like whatever it is. I didn't understand it. So I was like, all right, because I'm having trouble figuring like that out, why don't I backtest all the wins I've had? And like, what did the winners, like what patterns and stuff did price do in my winning trades that I can replicate, which is once again, it's just the 1 to 3s and the ASMA thing. Because at that point, it's just what price is actually doing and not like where it's kind of heading towards. Does that make sense?
Yes.
Yeah, kind of.
When it comes to your decision-making process for a trade, talk me through like your top-down analysis or what is the step-by-step process that you do from opening your laptop or whatever and actually executing the trade. What do you look for?
So if it's the beginning of the week, I do go to like the daily or how like the weekly closed previously. But if it's, later in the week or something, maybe I won't look at the daily. But more often than not, I look at the daily. Are we bullish or bearish? What is like our direction bias? 4 hour, same type of thing. But it really comes down to the 1 hour impulse leg. If that 1 hour impulse leg previously broke structure, where like what it did, did it leave liquidity sitting below it, like the impulse, like, whatever. And then from there, the impulse is like, that's kind of like to me is like the direction. And then from there, I usually would like fib that up. And then, from there, wait for like price to be in a discount on at least the hourly. And then from there, go into the 15-5 minute, same type of thing where I'm like looking for accumulation. And then from there is heading into session is waiting for that manipulation. Like for me, I call it like a 3-step. I call it the 3-step strategy, which is the liquidity grab, break a structure, usually like a fair value gap, tap and go. You know what I'm saying? Like that's just like a 3-step that I teach where that to me is like my bread and butter. I have so many different videos of like explaining different criteria. Oh, if we're bearish or bullish or whatever, if like an inverse trade, like how to identify if it's a market structure shift versus a break, whatever it may be. I really just once again look for the overall impulse, and then I just think that when it comes to trying to find risk reward or trying to find good trades, you have to be on the right side of the market. If you get into these little scalps, yeah, you can get into the 1 or 2s or whatever, but like understanding the overall, like where the impulse, where the money's like heading towards, and if we're just in a retracement or a continuation, and then from there is where I kind of gauge, what I'm doing.
So you're utilizing higher time frame for directional bias. Mm-hmm. You wait for an impulse in a certain direction. You wait for the discount to arrive. You identify a level. Identifying that level of demand. What is your process for that zone before you get into the entries?
Usually accumulation. Like one of the things that like, kind of we talked about with like the last like bringing up a really beginner supply and demand set with that first tap. Like if one thing just has like one little reaction or something, like to me that might not be enough. I need lows to be taken out. I need liquidity to be taken for it to be valid. There are setups where like if I got a liquidity grab and then I break a structure, I just need some sort of like maybe a higher low that then rebroke structure, and then I have those lows marked up where it's like a fair value gap, higher low, broke structure, and then demand zone where like if usually that had a liquidity sweep already where I understand like, all right, we swept liquidity here, we've broken structure, we've now like made a higher low. The liquidity to me is not under where I'm gonna put my stop loss, but actually just right under that higher low to then tap into my entry criteria, which would be like that demand right where the fair value gap is, and then executing from there.
And then you mentioned your 3 steps, which is solid. I use a similar one. And you wait for a run of liquidity or tapping into a very valid area. You wait for a confirmation, change of character, break of structure, so forth. Mm-hmm. And then you have entry point, which can just be an order block, an OTE, or whatever the execution point is. But that model makes sense because you're waiting for a valid zone, waiting for a valid reaction, wait for the market to show its hand, and then entering alongside them. Do you have any other limitations or restrictions on yourself in terms of time of day to be trading, or let's say currency pair, divergence. I know you were saying between GJ or you utilize DXY. I want to see kind of other decisions or considerations you have, even if you've seen this 3-step or break of structure kind of model in a valid zone with the context, but you might not take all of them. So I want to hear other thoughts that you have.
Well, it's honestly a great question, because that was one of the things that honestly really helped me define my strategy too. Was, let's say I'm on a pair like GU and I'm looking at the Great British Pound Index, but then also like the DXY, like the dollar index. If I am looking for the 3-step pattern and I look at both of those pairs, but let's say that like I look at the DXY and it's in supply, but then I look at, the BXY. I forget exactly what the GBP one is. I think it's the BXY, right?
I don't use indexes myself,
I think it's BXY. But if that's also in the supply, like a lot of the time, they'll both be reacting off of supply, where I'm like, oh, well then I don't even really know what GU is going to be doing. But you'll often see a run of liquidity on the DXY of lows, and you'll see a run of liquidity on the other one, BXY, at the same times, and then inverted.
Okay.
And then once they invert or whatever, I'm able to go to GU and understand like the 3-step, and then they all kind of will be like writing a book kind of. You know what I'm saying?
Yes.
The DXY is breaking out bullish, the BXY is going bearish, so like we're most likely going to get sells. You know what I'm saying? Like whatever. I mean, buys, whatever. So
yeah, this one is I've never tested it, but I can visualize how it works, and logically it makes total sense. If for the index is basically everything USD related amalgamated into one price action, and then if you are trading a GU, you have clarity on what USD is doing, and then you're seeing, is GU moving because of GBP or is it moving because of dollar? Because it's going to move because of both, or maybe just at times one of them. So the indexes, I can see why that gives you clarity, and I'll probably look into it myself too. What about divergence or correlations between correlated pairs? Let's say a GU and a gold, or I don't know, GU and EU, as I do, USD CAD and oil. These are non-correlated assets. How do you use that to your advantage?
Same type of thing, where like if I understand, like to me, USD CAD and GU are kind of inverse correlated with the USD pair. And same type of thing where like if they both are in a supply or whatever, I just know that like one of them's not correct. Like it's just not adding up. I don't know how to like put it, but like if you use correlation to your advantage, to me it just makes so much sense. Like let's say if I just was looking at the DXY, like people don't even like know the concept of like if we're trading GU, they don't even know that like if the DXY is super bullish that we're getting sells on G. Like they don't even understand that, which to me is such like a big part of it, where it's understanding like. Because there's times that, like, if you really know market structure, there's times that you'll go to the DXY or whatever, and you'll be like, oh, like, yeah, I want to maybe, like, buy or whatever, but, like, DXY is so overbought. Like, you're like, this just doesn't make sense for my trade setup. Like, I just don't really see, like, I say I'm looking for sells on GU. I don't see, like, the DXY continuing bullish or whatever. It just will make me kind of take a step back and be like, all right, maybe I'll just paper trade this one, you know?
I know you mean. You're getting kind of multiple reference points, and overall consensus is your decision.
Yeah.
What about the time frame of that? So, for example, I'm using myself EU and GU, and they do quite often mirror. At times, inside of a session, they might depeg temporarily, just for 10, 15 minutes. But that depegging, a lot of times, is useless. There's no information in there. But when that depegging happens at the right time, at the right place, then I can take something from it. So. But I only found that to work for me on the M1, M5, not on like a daily and higher time frames.
Yeah.
Are you using correlations or depeggings on every time frame, or
really
not?
Just like 5, 15? Like really just entry. Like I don't even really like, if I'm looking at like I won't let the correlating pair tell me like bullish or bearish kind of. I guess if there's fundamentals behind it, yes. Like if there's the dollar news or whatever, and I understand for the fundamentals of it, then maybe. But more often than not, it's really just identifying my trade setup on the actual pair, like GU, and then from there, when it's getting down to like entry time, kind of going to the correlated pairs and looking for it. Other than that, I don't look for like divergence. It really is just looking for like liquidity, break of structure. Like one of the things I've been testing a lot lately is just waiting for whatever supply led to the break of structure, testing if I just need at least the accumulation to be broken for it to be break of structure, or actually waiting for the supply that led to the kind of the break to be what needs to be broken to actually then retrace and go. I don't know if you understand that kind of.
You know, when you mentioned earlier that you're still journaling and you're still, curious, you're still testing things, you're still trying a lot of things out. I want to hear like your beliefs and processes on these topics of like the importance of journaling, why you still do it, the importance of backtesting, why you still do it now, despite having a profitable system and so forth. And how you navigate all these things. Because I've had traders on the show that like, I used to backtest a lot, but I don't do it anymore. Or journaling is like, I do it sometimes. So it seems like you're rigid in both or everything. So why is that you are like this?
I think that I really took collecting data and stuff really seriously a couple years ago. As of recently, I haven't been doing it as much, but I want to do a deep dive coming up to like the end of the year once we, end Q4 and stuff. I definitely will be doing a deep dive into this last year of all my trades. But I just think that like I understood so many people out there, like if you don't know what you're doing wrong in trading until you really like identify it. You know what I'm saying? But even when it comes to identifying it, so many people still don't even like react or change things. Like I get so many DMs on Instagram, like Luca, I'm failing at trading and like all this type of stuff. Like I don't know what to do. All right, well, what's wrong? What's going on? They'll name me all the things. Oh, I over risk, I overtrade, I have bad risk management, I'm trading at the wrong times. And I'll just respond saying, you just told me all the things you're doing wrong. What do you want me to tell you? You know what I'm saying? Like, it's just that hard love where it's like, you know what you're doing wrong, but you want me to tell, like, do you want me to copy and paste and resend to you what you're doing wrong? Like, that's how I kind of tell them, like, you really need to do your due diligence. If you want to treat trading like a full-time job, well, then go and study and actually like try to be better. Don't just come to the markets every day like, dang, usually when gold has a double bottom, it usually buys. Like, you know what I'm saying? Like, it's a little more complicated than that. That's why like 99% of traders fail, is you really need to understand that there's a reason why there's so many losers in this space, and you got to really like dived in to all the reasons why you're losing. Like, just be okay with sucking. Like, be okay with being a bad trader until you understand all the things you're doing wrong, and that's what's going to turn you into a good trader.
Okay.
You know?
And what is effective journaling to you? Because even the word journaling can be quite misunderstood, or everyone has their take on it. Mm-hmm. So what is the way you journal and find it useful?
Time of day you're trading, what the strategy is, honestly. Like, the time of the day, the strategy, and then usually the outcome. Because at the end of the day, like, how I got my exit criteria was from all the trades that I closed, whether it was such high, whatever, I had to go back and then identify all of them to then try to like collect the data of like, all right, what is the best scenario based upon all my previous trades? So I just think that it's time of day, what pair it was, I guess like what size it is, but you should just always have good risk management. You know what I'm saying? Like, for me, that's just a given, but it's just, I like correctly identifying all the things that maybe like went wrong on previous trades, so that you can just, I don't know, you just need to take notes so that you know, were you in a bad mindset? Was there I don't know, there's like all these little things that you just really need to like pay attention to.
Do you find benefits in, for example, the reference I want to give is when I was at university, I always used to take notes. I never used to, and then when I started to like it. And my note-taking process was probably not the most effective looking back, but I'd have my lectures or whatever book I'm reading, and then I'd just kind of write down exactly what I'm reading. And I would never review it. I would not like write my notes and then read them again 10 times, because it was literally the same. I was just maybe condensing it here and there, or saying it in my words, how I understood it and so forth. And for me, therefore, a learning format for me was writing it down helped me learn, meaning to say the note-taking was the learning, not reviewing the notes was the learning. Other people that I knew were taking the notes to condense, and then they would just continuously read that until it was ingrained in their mind, meaning reflecting on the notes was their learning. But for me, writing the notes was my learning. Yeah. So when it comes to journaling, is your creativity or benefit of journaling coming from the act of doing or the act of reflecting on it, revisiting it again and again?
I would say both. That's such a good question. I ended up making my own, like I paid someone to make like an Excel spreadsheet that I share with everyone for free and stuff, that like was just like how I started, was just like what time, what pair, like all that type of stuff. I think that the act of doing it is really good for the psychology part of it, understanding like, dang, what was your mindset like in that moment? But I think it's like the aftermath of actually collecting all the data, going back on it, and then being able to identify the rights and the wrongs and the losing trades, what were happening and occurring during those times. You know what I'm saying? I just feel like people don't do their due diligence to do that.
Well, when you've done a journaling session and you've come to certain ideas like, this trade type is not performing as well anymore, or I'm not performing it, whatever you're noticing from your journal, how do you go from identifying a problem and then actually going ahead and solving it? Mm-hmm. Whereas you could say, I might just be having a losing period. That's 3 losses in a row. You don't want to jump to change everything after 3 losses. But then you also don't want to leave it running for too long, and you want to address certain things. So when you're journaling and you're seeing changes or seeing like, okay, this is not working anymore, do you then change it right away that day? Do you give it like 20 trades, let's say? Do you do a full reback test on it? Like, what's your process from identifying an issue in the journal or potential opportunity to improve, and actually then doing that in the live trades and not just in backtesting?
I really do think it just goes back to then, like, once again, if you have all these trades that you've taken with a certain strategy, it's then like taking things out and then putting things back in that like make it work, which once again, I feel like a lot of people, I don't want to like overly tell people out there to like go and critique your strategy and do this and then change it, because I really don't change too many stuff. It's just the little things like waiting for low to be taken out, like waiting for liquidity, like just these little things. It's not changing my whole strategy. I just don't want to overcomplicate things. But if I identify a problem, I then just have to go back to the drawing board, go and then backtest it. Because for me, when I backtest, like, it's not just I'm clicking candle by candle. I have session times I'm trading. You know what I'm saying? If I know that I only trade from like London Open to like an hour and a half, 2 hours in a session, or New York Open, whatever, I'm only going to backtest those things, because if that trade's playing out at 4 p.m. in the middle of the day, well, then it's not for me. I wasn't trading that time anyway. So like that data doesn't affect me. You know what I'm saying? So I think that's an important thing, is that like, if you're going to backtest a strategy, if that trade plays out at a time that like isn't in your window, then like that's not a valid like data to kind of, collect.
So you mentioned as well that you travel a lot, and I've had since I was 18, I was traveling a lot because my university was in Madrid. Family was in the UK, so I was back and forth for 6 years, my whole degree. And then since I've graduated and finances on my side, I've traveled a lot too, and I've had multiple bases at time, living between 2-3 countries. And even this year with the show and so forth, I don't know how many flights I've done, but it's like I don't know, 15-20 countries in this year so far, halfway through. And I've found that I can't really travel and trade that effectively. I don't know why. And I still do it at times. And if I'm at a place for like more than a week, I will. But if I know I'm somewhere for like 3-4 days, I just actively won't trade. I won't look. And it's not that it's not a sleep issue. It's not a jet lag issue. It's just I'm not in the zone issue. So I tend to just stay away if it's very short trips. With the traveling that you've done, how do you manage trading alongside?
Yeah, that's a great question. I think one of the things on my trading plan that I used to have just written at the very top is that if my mind's not there, neither am I. Like, if my mind's not there that day on the charts, then like I shouldn't be there. So like if I'm traveling and there's a day that I'm too distracted or whatever, or like I went out the night before, I'm trying to wake up and trade, I definitely wouldn't recommend doing that. It's just going to cause bad decisions. But that just comes back to then having experience and understanding, like, if you're not in the right mindset, maybe you shouldn't be trading, because at the end of the day, like, if you're really out there trading with real capital or real live account stuff, like, you're like, why go make those stupid mistakes? That's how I kind of look at it. A lot of people who I feel like do that or like push it is because they're usually like doing a challenge or trading it when they're just trying to gain experience or pass their challenge or whatever, When you do travel, do you still trade if you're doing a short trip? Let's say like 3-5 days and so forth, or we just say not for me? It really just depends, because this last week, I was just back in Miami this last week, and I was staying with some traders in the hotel room, and we did trade because it's like fun. We like would wake up and like all 4 of us around would sit at a table and like a setup and stuff. And that stuff's fun because I don't really get that a lot back home. But I don't know, if I go on like a vacation, I'm going to be gone from Monday to Thursday or whatever. Yeah, I probably might just let it go. You know what I'm saying? Unless there's like a really good setup. Like, I might still look at the markets, obviously, and still send markups and whatever it may be, but I don't want to force it. That's not.
The reason I asked that question is because this Forex lifestyle that is very, what is the image of a Forex trader is like nice car, always on the beach and trading from the beach kind of thing. And I've had my periods of doing it, and at times it can work, but it's not just the most stable way. So the reason I took that line of question was to see like that Forex lifestyle that you maybe got into, that I got into at the beginning, what that reality is behind the scenes. And actually, let's touch on it. What is your thoughts on that typical image that a lot of traders probably have in the back of their mind when I say Forex lifestyle?
It's all a bunch of bullshit. You know what I'm saying? Like, it's all that whole like Forex lifestyle, want to live like me, copy and paste my, it's a bunch of bullshit that like it's what's given this industry like a bad name. I think that like that can be the reality, but that's usually just like a little part of it. You know what I'm saying? Like, you're going to see me go and grind 3 weeks on live streams, doing really well, trading at my setup in my room, and then go and experience that 1 week of going and traveling and being out with my friends and driving nice cars and that type of stuff. So it's like, I think that, if you're gonna be on this trading industry, don't compare yourself to others and look up to all these like people online, because a majority of them that I know and stuff are all a bunch of bullshit. So it's like, really just understand and stay in your own lane. I think that's how I was able to do this, was like, I don't look at myself as this big trader. Like, I don't think I'm like up there making this big money and stuff. I'm just so okay with being like the person I am, the trader I am, because, I have, a bunch of proven track records. I have, I'm a full-time day trader. I've been doing this full time basically forever, because I did it straight out of college. I had a job lined up as a financial advisor, and ended up during the onboarding process just quitting and becoming a full time trader over 2 years ago. You know what I'm saying? So that was a crazy thing. And like, I just, once again, I think that once I started getting, I don't know, the Forex lifestyle for me brought the freedom, and that's the thing I only care about. It did give me the nice watches, and I was able to buy a Porsche and do that type of stuff. But like, I think that wasn't, you know, it just goes back to just, I did at first kind of compare myself to people I would look up to, you know, especially all like the Miami traders and stuff with the nice cars. And then I really just realized that like, that is obtainable, but like so far down the road with so many different things. Like, I just wouldn't go into this industry saying like with that as like, you're like, that's what I want. You know what I'm saying? Yeah. It's bad.
When it came to the trading journey that you've had, and the beginning journey was like COVID time, and you were in college, and then you ended up being at home because lectures were cancelled and so forth. So you have a very relatable beginning, and I was in a very similar spot in COVID, you know, obsessed with the markets too. But I saw my degree out, and as did you, right?
Yeah.
You completed your college. Okay, so we did the same thing. Upon graduation, I left. I was like, I don't need to be a dentist anymore. And it seems like you did the same. Or did you start your job and then quit
I was
soon
in like
after?
the onboarding process. So you had to pass all these state exams. There was like 4 or 5 that were just dreadful. And I got past 2 of them. I got past 2 of the exams that are just like these hard, the Series 7 and the Series 63. Yes. So like just actual like big licensing things. And I have really supportive parents who, you know, I didn't really come from a lot of money and stuff. And like, I would say that like, they didn't believe in a lot of the Forex stuff at first. And like, even for me to quit doing this job to pursue it full time, you can ask any of my family members, that was one of the biggest like terrors. And I had a girlfriend at the time. Like, I didn't tell anyone. Like, I had it in the back of my mind, like, I'm going to quit. Like, I'm not going to do this job. Like, I just was, you know, I was funded. I got a couple payouts and stuff. Like, I'd done things where I was like, I could do this. You know what I'm saying? Like, I was doing YouTube. I was posting steps, and I was live streaming for free. I was gaining a community, and I was like, this is what I want to do. This is so much fun. I love trading. I even to this day, I love trading. I love charting, like technical analysis. Like, it's so much fun to me. So I just, you know,
walk me through that day you decided, okay, this is enough. You're passing the tough exams.
Yeah.
The job is lined up. You've already done the years of the degree, and you're upon that journey of today's the day. I'm gonna quit my job.
It was such a hard day just because like telling like my dad that, because like a whole thing, like when you go to like college and you want to get a degree, and like I was actually a first generation college student, so like it was a big thing for me, for my family to go to college because no one else had done it. Yes. Exactly. So like to go to college for the pride thing, to graduate with the degree that I worked so hard for. I got like a 3.6 cumulative GPA. Like, I tried really hard in college, and then for it to then like quote unquote supposed to lead to a job, and then me get that job to then quit was a lot. So I just remember him just being supportive, but still just the tone and like, are you sure? Like, are you sure you want to do it type thing? Thank God they were supportive, and like, you know, they didn't tell me not to. And that was one of the best things ever, was they didn't tell me not to quit the job. They tried to ask if I could do both at the same time and whatever, but I had to kind of show them like, no, look at this community I'm building. Look at my trade record. Look, I just got this payout of X amount. Like, I know it's not a lot, but like, that's, you know, like that's what I'd be making at this 9-to-5 job. Like, why can't I do this something that I love type thing? So it was a hard day. I was like, I remember just holding back tears for a while, not even just that day, but for weeks, especially with like my girlfriend at the time and everything, because I just was like, I felt that no one believed in what I was doing. Like, no one had the vision that I had of like where I could take this, because I didn't have the bigger results at that time. So no one was like, you're going to quit your job and do what? Like what, trading? Like what? You're gambling. That's all I heard, was that I was gambling, and that's a gamble. And like, I still, you know, we'll hear that here and there. Actually, less now. You know, it's just crazy. Once you buy a Porsche, everyone shuts up. But it's just
this whole idea of like people around you not believing in you, and usually it's not from a bad place. Usually it's from a place of people care for you, and they just understand enough what you're doing, and they want you to take the stable routes because then they think you're safe, and you maybe have some beliefs on that. But there's probably a lot of people watching right now that are on that edge as well. They're like, I want to go all in on trading. I want to make this my life. And it's the typical story of like high school dropout, college dropout, quit my job kind of, you know, it's a big decision. And I feel like a lot of people are like too keen to do it as well. And someone that's done it, as someone else that I've done it as well. I could have done a job, I just chose not to. but everybody has to manage the expectations of their loved ones as well. So what safeguards or what conditions did you have for yourself apart from your inner belief? I mean, like, what did you set up for yourself to say, okay, I'm going to quit now and not in 6 months or not 6 months ago? It's like right now.
Oh man. I mean, just the belief. Like I did not have the financial backing. Like I kind of did. Like I gave myself a couple months of stability, but it wasn't like, oh dang, no, I have 12 months of rent paid or whatever. It literally was me going, if I put my back against the wall, I'm going to grind, because I didn't want to live at home. I didn't go move in back home after college. I was like, I'm going to go live on my own, pay my bills as a full-time day trader and just F it. You know what I'm saying? Like, let's just see how it goes. And like I said, like it kind of, putting my back against the wall was one of the best things, because it makes you just grind. It's like that fight or flight mode where it's like, all right, if you don't trade well or you don't follow your trading plan, you're not going to eat this week. You know what I'm saying? Like that's really what I was telling myself, because like you can even ask my parent, like whoever it is, like they would offer like, hey, do you need help this month or whatever? No, what do you mean? I need help. Even though maybe I did, I was, I just, because I didn't want them to
Was
think
that pride or was that more like you want your back against the wall to have that drive?
No, like I think it was like a pride. It was a little bit of both, but I think it was a pride thing of like, they didn't even really want me to do it in the first place. So like, what if like now I'm like, it only kind of happened at the beginning. I kind of figured it out kind of fast. But it was kind of a pride thing of like, dang, like they didn't even want me to pursue this now. Like, what if I go to them now? Like, dang, like I'm having trouble paying my bills, like whatever. Which like, it wasn't serious. I just remember like I never once asked, but I just remember there was 1 month that like I just didn't do well on my trading accounts, that my mom had always asked and I never said yes. But there's 1 month that like I didn't say yes, but in the back of my head I was like, maybe like I could have. But God, I mean, now I'm able to support them, which is absolutely amazing. Tables turn, which is awesome.
When I see, for example, like a Conor McGregor, he had such a cool come up, and he was that guy that was from nothing, from dead broke, and he was in the gym and he was just grinding to make a future for himself. And then he had such a astronomical come up, made all this money and made proper 12, $100 million exit and so forth. And now you can see his life. He's living life, enjoying it, whatever. But his motivation is gone. He's not coming back to the ring. He's not fighting anymore. And it seems like the money spoiled the career and spoiled the drive, and that saying of like, it's hard to get up and train if you're sleeping in silk sheets kind of vibe. Yeah. So when you had those days of your back against the wall and you have that kind of shame to ask for help around you, so you just make it work, and you push yourself through fear, desperation and so forth. And then now when you're not in that same tough spot financially and not that same fear that's driving you, how have you found that same motivation to keep going and pushing hard?
Oh, that's such a good question. I mean, bro, when I started trading, I had $1,500 in my bank account, and now I have hundreds of thousands of dollars. And I'm not saying that to flex, I'm not saying that to anything, but I have the same mindset. I have the same exact mindset. Why? Because there are people out there living the life that I want, and I know that like there's no one out there that's gonna help me get there besides me. I have 3 sisters, I have 2 brothers, I have like multiple like parents and stuff who, like I said, like my parents and my family aren't wealthy, where it's like these trips and this lifestyle that I want to go on is happening because of me. They're not going to do the work. And I'm trying to motivate my sisters and my brothers, like, you guys should be trading, you guys should be doing this. But if they're not going to do it, what am I going to do? Like, I want to take care of them and do this type of thing, where that's the motivation, is that like, I want to live that lifestyle that like no one thought I could, because I'm not supposed to be here. Like I tell everyone, I just did a meet and greet this last week, and hundreds of people in the audience, and me just standing on stage with the mic being like, guys, like I know that like I'm technically like up here, on the stage with security and stuff, but I was like, I should be right there. Like I'm no different, because I truly believe that I just am someone who like worked hard. And I think that if you work hard and you believe in something, you can see something that people don't see, then it's just up to you to like chase it and just like keep chasing it. Because like, once again, like we're only on this life once, and it goes back to like, you brought up like people probably are out there in a similar position. Like you're never going to be this young again. It doesn't matter if you're my age, 24, or you're 36 or 40, whatever. The day that you're at right now, you can't go back a day. So it's like, you have to start, and you have to just start because I told myself that like, if I go full-time day trading and I fail, well then guess what? I'll be 21, 22 or 20. Yeah. I was like 22. Yeah. You know what I'm saying? So
it seems like you have done a lot at a young age, and regarding taking care of your family, regarding not having to work a job anymore, and other milestones that we maybe haven't spoken about. So just to finalize the episode, what is the proudest achievement that you have done, and kind of share that feeling with the audience, so that when they have their prideful moments, maybe they can relate?
Yeah, that's a great question. I would say my pride, like one of the most prideful moments is just like having my family be proud of me right now. Because like I said, or even just like friends around me who like maybe didn't believe in me, like it's kind of cool now to be in a position where like last week I was in Miami all week where people were texting me, like people just see that like I'm not living that, like they're all working 9 to 5s, they're all doing this thing where like I just hope I'm an inspiration. That's all I want. I don't want to be looked at as like, oh dang, Luca's like living this lifestyle. I want to inspire all the people around me to try and be better than they can even imagine. Because like I said, me doing well from where I came from was me getting that 9 to 5 job and being a financial advisor, which I set out to do and I did. But now to quit that and then do the lifestyle I'm doing now is a completely new level that like no one had in mind for me, that like no one believed I could get to besides me. So like I just really encourage everyone out there to like just go for it. Don't think like, you know, if he asked me what my biggest achievement was and I said, oh, buying the Porsche. No, like buying the Porsche was a big milestone for me and I loved it so much because to me, like the biggest thing about the Porsche that like was the biggest flex for me was not that I bought the Porsche, was that I bought the Porsche and it didn't really affect my finances that much, which is something that I know a lot of like gurus and people out there can't really say because they usually will save up a little bit, like make some withdrawals and then go buy it. I saved up and I think it came from the being broke by myself out of college with no savings. It's like now that I have savings, I don't want to touch it. I'm like, no, I'm good now, which is kind of like a different mindset, but that to me was crazy. Like being able to buy it, have that next trading week was huge. And then just be like, wow, that was actually crazy. I just got to accomplish something that I thought, I always wanted a Porsche. I always told myself like, dang, I can't wait till I'm 40, 50. I really want to buy a Porsche. And I bought it at 23. You know what I'm saying? Like that to me, and I'm not saying it to flex. It sounds like I'm flexing, but like literally, like I just know that like I wasn't supposed to be living this life. And I'm just, I'm proving everyone wrong because you can do it, bro. Like everyone out there can do it, you know?
There we go. Luca, thank you for flying down all the way from LA to Miami to make this happen. You dropped a lot of gems. So I just want to thank you again for coming on the show.
Thank you so much for having me.
Boom. There we go.